Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. Can I please get a screen and audio check in YouTube and the Bookmap Trader Lab? Hi, Marty. And how we doing in YouTube? Appreciate y'all visiting Trader Lab. I am having a very difficult morning here technically, having a number of crashes and internet dropout. It's sort of the perfect storm. So, and the laptop is, as you guys probably remember, is having a motherboard failure. So, not fun. So, I appreciate your indulgence and your patience. The graphics are also having trouble here. So there's a pretty good chance I'm going to be dropping out and the computer will be crashing and I have to restart. Just takes a couple of minutes to get it all back up again, but please be patient. We've got a lot to talk about today, and hopefully we can get through it without too much disruption. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and should not and is not suitable for all investors. Past performance is not necessarily indicative of future results. If I get into real time, we'll talk. The other thing about this is Bookmap support. Could you please place the link for YouTube into the Trader Lab chat? Also, if I crash, please put the other link. If you're visiting in YouTube and I crash, what will happen is it'll automatically shift to a new link, but it will take a few minutes to do that. So if that happens, please be patient. I am wrestling with substantial challenges here in Costa Rica. And it's not Costa Rica's fault. Graphics are very slow here, so I anticipate there's going to be some problem with that and maybe crashes, so just be careful when you see this happen. There's going to be a special event coming up next week. It's about order flow breakdown and how institutions move markets. It's with Scott Pulcini. He's also one of the streamers here in Bookmap, but this is a special event. You might want to drop in and keep an eye on that one. So don't forget that. That is coming up next week. Now let's get into things. I'm going to start, hopefully, with a higher level overview. I want to give you a sense of what the plan was coming in today. And this is important, of course. So what did we have? The past 2 days. Now, my view is not important. You have to understand something. This is not a business of prediction. This is really a business of alignment. And alignment is really about different time frames. What I attempt to do in the Trader Lab, and I want to really make sure everybody understands, I am speaking to developing traders, and we all are in different places in our development, from newer traders, and newer in my world is maybe a couple of years or less, up until whatever, 10 years, 12 years. They're all here in the Trader Lab. 20 years. I've got 47 years. Our senior trader has about 50 that he admits to. So everybody's different. But when you're building the business out, it's more of a slow down, smell the coffee, and see the structure. Because you have to learn in a higher time frame how markets operate. And then as you get proficient, you can start shortening the time frame so you can trade inside. So the way the market tends to work is it goes up to go down, and it goes down to go up. So if the higher time frame is maybe a bull market, then what we're trying to do is, if we take the week longs out, it sets up the possibility to now get the shorts that are in here. And this is just yesterday, so you know what we're looking at. So this is day before yesterday, to squeeze. And that's what you see happening here. So we know we got buyers under here. And yesterday we had a gap, and what I was looking for initially. Now, when I say look for, all I'm doing is aligning. And then if it changes, I change. It's not a big deal to me. I don't try to pick the high of anything. And when I say that is, I'm always speaking to developing traders. So it's not about picking the high. Now, when you become proficient, you can take what starts out as a counter trend trade, which may or may not become the high of the day. It's a different time frame, so it doesn't matter. And developing traders should not be distracted or confused by what other traders do who operate in different time frames. The idea of it for a developing trader is to slow it down so you can anticipate behavior and wait for it, as opposed to operating on a hairpin trigger, which you can develop after a lot of time and a lot of market experience. So we have to differentiate that. And I'm always going to come back to that in the Trader Lab, because my objective for starting Trader Lab is to help traders develop and survive the learning curve. Because if you can learn and operate in the broad strokes, you can start taking that down. Because the market operates, what you see happening here is how the market works. It goes up to go down and goes down to go up. When you get into the intraday developing time frame, it's all the same process, but it shortens. I hope that makes sense. So as of yesterday, what I had was longs in the morning, and it's called mean reversion, outside in trading, looking for this to get taken out and high. Remember what happened over here. We had a report ETH excess, and then on this day started the sell-off where we liquidated these longs. I hope that makes sense. So now we have the shorts in the market from this day and this day. That's what sets up the longs. Market goes up to go down, goes down to go up. So in this day, we had a gap. Now the gap is a problem only because we can gap and go, one possibility, because of the shorts, or we can gap, go, run out of buyers, and then the longs in here have a problem, and that sets up the shorts. So for me, and I'm trying to slow it down. Remember, it was longs early, and then shorts at the end of the day for the long liquidation. Now, what is next? Well, if I got shorts in here, here's the possibilities. I can get longs now who squeeze these guys out, and then off we go again. Or I can get longs, they fail, and then I can come back under this low volume area, which separates these two distributions. It's right there. And then come down to my next structure. Now let me show you this structure, and then you'll see how the pieces might fit together. This is the target. So if I get below this low volume area and this high volume area, so think of it this way. This is the fair price from yesterday, highest volume. If it becomes too high, I can leave it. And then if I get through this area, I can come down here. Now let me just show you today, and then I'll show you how this all came together, hopefully. There's the target. So what we did is longs yesterday, c'est la guerre. It was called mean reversion. We had another mean reversion that I think took out the high by a tick or something. Then it failed, and we took out the longs. Today, it was reversion again, looking to squeeze these guys out. Not so much. Then shorts, next target down here. If it's too low, think shopping. Then I squeeze the shorts in here and the shorts in here, and that sets up potentially to come back here or not. Okay? This is the higher time frame. Does that make sense? I got to show you something over here too. This yesterday was the last short, and this is where we failed. The buyers got run over, and this sets up called the neutral extreme day. This is market profilage. In here is a low volume area, and it's around 90, let's say, to 94. 90-ish up here, down to here. 90, wherever it was. Did they say 90, 94? Yeah, 89. And so this was too low. And when we open above it, this is our outside edge. If we fall down here, Then we can take out yesterday's low, and this is the next target. So I just want you to see structure. So then if you go back and look at today, you'll see that's exactly what we did. Now, again, I'm not here to predict anything. I'm here for alignment. And I'm here also to kind of align with what I perceive to be the higher time frame so I can slow it down. And by the way, I cannot see YouTube because I'm stuck here with only one monitor, and I'm on my phone trying to watch the Trader Lab chat. So that's my thrill. And remember, if I drop out, I will come back. Okay, now let's go to Bookmap. Now, this is the overnight volume point of control. This is that low volume area. This is the value area low, the outside edge where most of the volume is. This is the ETH high, and this is the retail price from yesterday. Now, when this thing opens, I'm kind of met with a couple of issues. One is my ETH high is below this. That might mean it's too high. And again, might. My value area low is here. This means this is an outside edge of where the most of the volume was yesterday. There's more. Somewhere. Hold on. I'm going to be stressing this graphics card in the CPU. So, and there's no warning when this thing goes south of the border. It just goes. This is the ETH low. Now, there's over 90% probability we check the ETH high low. Who knows? Yesterday's low or high has about an 82% probability. Don't hold it to me. I'm not going to spend the time looking for exact, right? High probability. Yesterday's low is here. And what was the target below? If we get there, and I have no clue, is this. That's that naked volume point of control I showed you at the beginning of the stream, and you can look at this stuff. So when the market opens, I know if I'm opening in value, in range, then I have the potential for two-sided trade, and this is the ETH overnight volume point of control. What does this mean? This is the highest volume from the last auction, ETH. If it's too low, I can get long and then put my helmet on. And why would I be thinking longs? Maybe because the market's short from yesterday, and maybe the shorts that came in at the end of the day. And don't forget, we had a short in the Trader Lab, which was a nice short, okay, for the long liquidation. Maybe those shorts who are still in here are going to get squeezed. So because the higher time frame is up. So I'm kind of putting these pieces together, and I'm not trying to pick the higher low. Remember what I'm trying to do. I'm trying to slow it down so that developing traders can create a methodical process. Now, at 825, and I was discussing this. By the way, this is where I crashed over here, just so you know, part of the joy. This is now a sell sweep. Let me show you. Now, let's assume that there's no long here. This is a long. Why? And it's not a long, but it is. So what I'm saying is if you wait for the RTH open, you wouldn't take this. But here's what you would see. You would see this as the retail price. You know below you, you have the ETH low and you have the ETH high above you. Pick one. You know that low volume area is down here. And if we break down, this is on the hip parade and so is this. And if we go up, it's the opposite. Wonderful. So let's look at the first trade. Now for me, the first trade's a long. So let's look at how that might happen. And again, let's be very specific about this. There's no right or wrong in trading. There's only statistical probabilities and edge. I might take a long, other traders might take a short. It's not about right, wrong. At least it's never been for me. It's about edge, and it's about alignment and taking trades that I know have a chance of at least getting risk neutral. and then either it goes further or it doesn't. Whatever it does, it does. So let's go back to what I know. I have buyers here. This is absorption. Let me just go back a little bit here. And liquidity is here. Sellers are here. This is a sweep. This is absorption. This is a long trigger right here, just so you know. Okay, but it's pre-RTH open. Now, what happens? I have sellers here. This is absorption. Now, I don't know anything. What's the difference between that and that? There's no difference until the buyers are here, the sellers are there. I don't know they're there until here. Because right there were my buyers and my sellers are below my buyers. So once I have this, I know my sellers were there. This is microstructure. And this is how I read the market. And it's just a way for me to go, what's happening? I don't know. So the sellers are there and the sellers are there. Now, what can happen here? Well, the buyers are there, Tom. The buyers are there. There's my buyers. There's my sellers. I'm showing you just something in micro. And there's my sellers. Now, I come back here. What was here? My buyers. There's my liquidity coming in. This is the RTH open. Watch. Now, I'm looking for longs. Why? Because the market is short and I have locations. Here's my location. Overnight volume point of control has, I'm going to take a guess. I can't look at my stats at the moment. I opened higher inside of yesterday's range. Let me see. I'll give you that one. Overnight volume point of control, 81% probability. Overnight high, 76% probability. Let me look. Then I'm looking at the value area low here. And what else do I have? I had my buyers over to the left. I got resting liquidity, and I have sellers here. This is my location, 81% probability, and I'm hitting it right at the open. So I know, and I had my buyers to the left. Right here, I take a long, and the long is again right here. This is very advanced. Now let's assume we're all asleep in the hammock. This is called VPOC migration, and this is not where anybody ought to trade. This is very aggressive, and I have alignment. Variable high volume node. Let me label it, and don't forget, if I disappear, it's my computer crashing, which it does when on a whim. No warning, it just disappears, and I will reboot and do whatever, get everything rocking again. So, apologize for repeating it, but I know some of you come to the stream late. So, too low, liquidity, sellers, buyers. What was here? Sellers. If I get above the sellers, and now I get my sellers, where's my buyers? Where's too low? It's right here. So this is support, micro, full session. Oh, I can't say it's full session VWAP. I don't know if it was there, so never mind. Break high, sweep. So what do I have here? Support, support. Buyers are here. VPOC migration. Sell, sweep. All this says potential longs. I need to get risk neutral. Looking to squeeze. Pull back. Where's my support? Right here. So I'm taking longs initially. Now, others are probably taking shorts. It doesn't matter to me. I'm showing you a broad stroke with micro structure for triggering. So what I've done here, too low, value area low, outside edge of a fair price, looking for statistical probabilities to come here, 90% probability, because my thesis so far is that the shorts now might get squeezed from the sellers yesterday at the close. Does that make some sense, guys? And if you're in YouTube, I can't respond to you right now because I'm in a difficult situation here in Costa Rica, so I am trying to watch the chat in Discord. Are you guys following? Yes? No? Okay. Is this useful or should I move on? Useful? Give me a yes or a no. I'd be glad to move on. I'm trying to stay in a microstructure so traders can understand market mechanics in multiple time frames. Okay. So thank you. So this is where my longs are. This is my support. And this is I call this VPOC migration. This is a sweep. Possibilities are, do the Acapulco cliff dive or continue higher. So this is support, and of course the low of the day. And again, this is my target. So this is the long. Now, liquidity comes in here. This is important. When the liquidity comes in, and this is advanced, for developing traders, there's nothing to do. We're not worried initially about this. What we're worried about is, the first piece is location, understanding the auction, and then getting risk neutral and trade management. First piece. This becomes an obstacle. It does not become short. It becomes an obstacle. So now it's trade management. What's too low? This. So what you would do, if this is your trade, you would get long, get scaled, and your stop would either go there or down there. One or the other. Doesn't matter. And why might it be under here? Value area low, and this was the retail price. If the retail price is too low, it's long. Okay? So that's the first trade. Now let's watch. This is an obstacle, and it's not a short. If you're trading in alignment, this subject to is trade management. In the trade management, we'd be down here. So you could be out of it there or there. Doesn't matter. The trade at worst would scratch. Now let's watch. This is your support. If it comes out there, you could be out, or down there or down there. Liquidity comes in the book. Let's see what happens here. Sweep. This says counter rotation. Liquidity. This sets up a reversion long. And what you're going to try to do is come back here. So what you would do here, there's a couple possibilities. This sets the long up, and this is the scale. Okay? It's called mean reversion. So far, and here's why. Liquidity, location. If it picks the opening swing low, this can be an inventory grab. Can't say it is, not my job. I break here. This sets up the trigger. My stop can go under here. I have to scale ahead of this. These are called reversion trades. So what they are is returning here. And it's based on this, and return here. And if I can come here, I can come across the range, squeeze the shorts out in here, and get to the ETH high. So that's the plan at this point. Is everybody tracking so far? So these are the longs in my plan for today. And I am not taking the shorts. Even though, subject to how I trade or anybody else does, these could be shorts for just trading the rotation. It doesn't matter. It just totally doesn't matter. As long as I'm above the low volume area, and this is a very key location and in this. So I have low volume under here. If I get into this, it's like a slipstream. So I need to be aware of this and value. So as long as I'm over here, I'm okay. Once I start coming under here, then things get interesting. Watch. I break below this. So right here is a order flow trigger. I posted this in TradeLab right here. And if I didn't, guys, remind me because I can't remember anymore. This is a short. Now, when this happens, now what you have is, so when this thing breaks here, or I think it was here, 90 anyway. Yeah, this here, right here. Let me show you the short. Now this is more advanced. This is an order flow trigger. And what the piece of this is here, under here, and under here. So this is very structured. So for me, it's this, because my buyers were here. Once I come under this, here, I can short it against here. So it's like around right in here. That's the short. And then statistically, it sets up yesterday's low. And yesterday's low, previous higher low is 82% probability. I'm below the overnight volume point of control. I now have the ETH low on the hit parade. There's over a 97% probability to take out that and a 98% probability to take out first hour's higher low. Now, in a broad stroke, this is a qualified short because I'm going to be emphatic here. I'm not trying to pick the high. I'm trying to align. So I'm trading in a different process, or I should say a more structured, rule-based process that we can, for traders who can be patient and learn the higher process, can turn around and become profitable. That's my objective. You don't have to have my objective. That's it. Are you guys following? Can you see the logic of why the longs and now the short? Okay. Now, is this a problem for anybody? Just need to know, is this not a logical process that you can lay out and slow it down? This is my objective. I'm not here so you guys are flip-flopping around. You'll go out of business. I'm here to slow you down so you can learn narration and recognize change. And the only way that's going to happen is if I slow it down for you and create a if this, then that process. So if it's if this, then that, we need to define where change takes place, not the high of the day, where structure breaks down. And then we can then know before it happens where it might happen. And then as we approach the area, tune in and wait for the structure. If I get below here and the variable high volume node and I fall out of value and the longs fail, and this was the last long, there's my short right here or here, 90. So if I get short here, my next statistic is there. Can you see the logic of, and let me ask you, would you be profitable on the day if you waited for that trade? Does anyone think they need to do something different to become a profitable trader, assuming that's your objective, as opposed to a dopamine fix? Is this a yes? Is this a no? Because if you don't think so, I'll do something different. And but then that's going to actually, I think, not be in most traders' best interest who are trying to create sustainability. I can go down in a shorter time frame. But what I have found, and I've trained a lot of traders over the years, on the desk and elsewhere, coaching individual traders and training them. When you understand higher time frame structure, you can then define it and align with it when it changes. For me, this doesn't change. I should say, it changes here, okay? Until this time, it's still a long over here. The break is the change, okay? Does that make sense? Okay, so if it changes, because now what was too low becomes too high, and my last long, where the buyers were, fails. Here's the key. I got multiple elements here. I have this is a order flow trigger. I break below it. I'm now below value and I'm below here. And I have, remember this low volume area from the previous day? There's nothing here. And if there's nothing there, I'm going here. Okay, let's look now. So I'm spending the time here because I want you to understand. Now, right here is another order flow trigger. Now, I got into my low volume area, and my target is here, 82% or whatever it is probability, and there's sell stops. Let's look at this. Sellers get below the buyers. This is absorption. Break low. If I can clear this, it can be a reversal. If I can't, it's an order flow trigger. Now, it's not a short because this is my target. Or, up to you, I'm just going to say it's not for me. Now, here I get absorption. This is resistance, and this is resistance. My sellers are here. My buyers are here. My sellers are below. You should be screenshotting these, or when you watch the stream, stop the stream, isolate the behaviors, annotate them. This is resistance. Break below, resistance. Look where I come. Resistance. So I got my resistance here, and I got my target here. And, now this is your business as far as, do you get out a couple ticks ahead of yesterday's low? And here's some rationale for you. What does everybody know? Everybody knows yesterday's low, there's going to be stops under there. What else do other traders know? There can be short covering into those stops. So what do? This is where you determine what to do. Here's what you do. You either take a profit at a fixed target, which has 82% probability, and at the same time, you know where the trade can reverse, which would be here. Now here, no clue, right? Do you have a clue? I don't have a clue. But here's what I see. Now, this again is specific to your plan. I'll give you this one. This is where this trade is done. Now I'm going to show you something more. Well, I don't want to go where I shouldn't go with you guys. Here, sidebar. Not along. What do you see here? I'm not going to use my drawing tool. It just puts too much stress, but look at this. This is too high. Too high. Same thing. Short still alive. Break high. Uh-oh. Short done. And what is this? What is this? I call this an order flow trigger. Short, break high. What is it now? Is it a long? No. Or yes. Subject to time frame. It is we missed a low. Shorts are in this leg. Now I'm getting more advanced, not a recommendation. For developing traders, you're out of it. Here, you have a profitable trade. You get back in the Barca Lounger. This suggests more upside right here. Why? Look. Go from the short side, break, too high, break, take out this, and come from the other side. It's not a long, unless this is your thing. For me, it's what's happening. Watch. Now, let me give you just something. And this, I want to emphatically say to you, is not a long unless you're a counter trend trader. You should not be a counter trend trader until you can trade with in other words, concentrate on alignment, not on counter trend when you're developing. What this does, if you're a counter trend trader, and you could put this in your scrapbook, where you annotate, this is a long for me, to there. See? Long to there. Or if you are trading in alignment, what is this? The mid, and what is running in front? Do you see something interesting? What do you see here? If you take a counter trend trade, and this is not for developing traders, let's put it this way. If you're on the desk with me and I'm teaching you how to trade, I'm going to be asking you, what is this? What does this mean? And then if you're doing the work and you're trying, and you're open to learning, you would say, it didn't break there, it can go up. Then I'm going to ask you, where might it go? You're going to look, you're going to say, I have resistance here, right? Micro high volume, too high. You're going to say, I got the mid, and I'm going to ask you, what can happen at the mid? You're going to say, I can get continuation shorts because yesterday's low, it missed it by one tick. It's statistically open. Isn't that the truth? Developing traders are going to forget all about this. And they're going to be maybe buying this or selling this. They're mechanical. You can't be mechanical. You have to anticipate. So if I'm a counter trend trader, I take a long, and now I see this, and it's blocking the mid. What do I know? I have stops at the VWAP. I have stops at the mid, but I have liquidity here. If I take a counter trend long, and I'm just isolating behavior for you, I got a scale here. I don't care about this. And if it gets through here, fine. Okay? This is a counter trend long because my statistics are open. And what else do I know? I'm below the ETH low. You didn't forget that, did you? And I have a statistic open below me. And what else do I have? This is my next target. If I can get below here, what else is blowing in the wind? This thing. Let's look. So this sets up a short or counter trend long or short. And what do you see here? Isn't that a liquidity trigger? This here is sitting. That's the buyers. If I break below the buyers, I can sell it to the statistic. I just want to keep you aligned with the thought process. If I get my buyers, which is a squeeze, by the way, and my resistance is here, I can get taken out, or I can get long there to there. If I'm trading only with the trend, I could look for a continuation trade here. And what else is out here? Let's come back to the profile. Low volume. So remember coming down, I took out a low volume zone, and that sets up this and down lower. I squeeze, and my outside edge is up here, low volume zone. And what happened up here? Let's just remember. This auction, which is the reversion longs, became too high. If this becomes too high, and I can't get back above this and this, then I have continuation shorts. Do you guys understand why I'd only be taking shorts now unless I'm a counter trend trader? Resistance does become support. Yes. And why would I only be taking shorts now? Are you guys tracking? By the way, if you're in YouTube, please remember, I'm in a very unstable situation here in Costa Rica. If I disappear, as they say, I will return. And it might take a few minutes, so be patient. This laptop is failing on the motherboard level, so it's a real mother, as they say. So I can get long, counter trend, or I can use this to cover the short. And then I'd be looking for continuation. And the reason is I have over 90% probability of taking out the first hour high low. I still have this open, and I have this open. All these are shorts now. I have no longs unless I'm counter trend trader. And this is a short. Let's look. Let's look at structure and how we might look at this. Let's drill into this. I got my mid, and initially, when I'm coming up here, now again, short or long or short exit. When you get this, now let's look at this from a few angles. I want to come back to trade management for a moment. This is really your resistance here. This is where this thing is, see you later, have a great life. This is still resistance. Does everybody see why this is resistance right here? I haven't seen that, Tom, so I'm going to have to wait until I get there. Uh, I haven't seen any of this. I'm right here, right now. So this is where it proves that we're going higher. And you need to understand this. Now, this is the absorption, but this is the failure. So I can get the counter rotation, but if I can't get through these sellers over here, I can break down. So until it does, it doesn't. When I break above it, now I have this, so I get my sellers. Where's my support? It's here. And I don't know if it's just going to keep going. Remember, I don't know that. I know this, okay? So if I know that, now I'm looking what? At the mid for continuation shorts. But look what's coming in here. So I'm seeing it, its sellers are here. I have a sweep. I'm looking for a counter rotation. I don't have a location for a trade. This is where I'm looking for a target and a scale. But when this liquidity jumps in and it's pretty heavy, then I'm not going to worry about it. I'm going to trail behind one option under here because of this liquidity, or I'm going to take a scale ahead of the mid, which was where I was trying to go to squeeze out these guys. And when they jump in, and look at this, buyers, buyers, buyers. Why isn't the market going up? Because there's sellers here, and I see the liquidity. This is where order flow comes in. And now I can exit or scale or do nothing. Now, this sets up either a short or nothing. See the behavior. Now, let's look at the change. And this is not necessarily a structured trade, okay? This is just a little more advanced. But I want you to see it. Here's what makes this trade viable. This, the low volume. So I'm putting pieces together. Let's look what else I know. Below there, I've got acceleration in this leg, and that creates the low volume over here. So if I have low volume, it's like, I'm out of here. Now, if I come back on the other side, now this is where the urgency was. I can come in here and test this, and either I'm going to get through it and go back up, or I'm only going to squeeze out in here, and then I'm going to continue. My low is still open, okay? So I have no longs, again, unless I'm buying this, which, neither here nor there. Or I'm looking for continuation shorts, 6-1. Watch. So where does it change, you say? Well, here's my buyers getting absorbed. My liquidity is not pulling. It's standing firm. So this is my first suggestion of maybe the sellers are here. The sellers are below these buyers. I come back up. My buyers are above the sellers. This is a consolidation. It's a fight. I have my buyers above my sellers over here. Support is here. There's the support. Okay. Sellers are here. The buyers, look at the way it works. The buyers are there. The sellers are there. Buyers are here. Sellers are here. Here's my buyers going to the moon. And what happens? Breaks below the buyers. So now I have a trigger here. Now, subject to your skill level, you could be selling this thing and your stop's got to be either here or out here, because we could just blow through here and squeeze. That's trading. Who knows? But what do I know? Low volume, outside edge, liquidity, failure. Now I have a failure. Where can I enter this thing? Subject to skill, I'd be entering in here, or I'd be entering down here or over here. Let's look. There. Why? You're going to say why. Let's see why. Buyers are here. Sellers take control. Buyers take the last shot, and they can be right. We don't know. Sellers are here. Sellers are there. That's the absorption. I'm looking at the absorption. Buyers are here. That's why it went up. Sellers are here. There are the sellers. The buyers are there, gone to the moon, break low. Now the sellers are firmly in control. Where's the last place the buyers were? There, and here. 2 places. Watch. I can sell it there. I can sell it here. And I'm going, for 0 or yesterday's low because of the statistics. Where's my support? Watch. Support is here. Break low. Yesterday's low. Okay? So far, so good. Now, and there's more. I have an IB stat, and it's over 90% probability to take out first hour's higher low. I got yesterday's higher low, and I have the first hour's higher low, 98% probability. If I get the squeeze, now where is my resistance? It's here, but now the liquidity pulls. Let's just see what it does. Let's come back. Let's come back. Got to show you this. This is more advanced, but I got to show it to you. Where did my sellers take control? Wasn't it absolutely there? So now I know I can lean on this. I'm going to scrunch this thing in. I want you to see market mechanics. Just take a look. Got it? Now, I'm not saying you should do anything with this. I'm showing you how you can anticipate behavior. Are you guys tracking? Just say yes, no, I don't know. What are you talking about? I'll explain it. Are you guys with me? Okay. So now right here, here's what makes me continue with the shorts. Because at 9:30, I have a 98% probability. You see? Now, I got yesterday's low, and you may say, is that all? And I'm going to say, I don't know. But what I do know, and there's a couple other things I'm observing here. I'm going to give you some nuance. Now, I'm going to give you something that's not written. This is sort of experience talking. And experience doesn't mean it will. It means maybe. Remember, the best you have is maybe. Maybe this rejection and we came to the low was aggressive buyers front running the low, and these sellers might get taken out. Okay? Why did we miss the low by 1 tick? Maybe that tells us something. Maybe. So this, for me, is a valid long on a trend. And this here, when this happens, this is not in the book. Okay? I want you to see the rationale. So for me, I'm thinking, wow, that's pretty aggressive buying. It seems to me the shorts are a bit skittish. I mean, can you see the thinking? So if the shorts are skittish, maybe I want to take a long. Or maybe I want to wait. But when this happens, and I'm approaching 9:30, then I'm thinking, okay, shorts again, which is here, down to the stat. I'm just saying. And then I get it again. Look at the buying. It's aggressive. But where were my sellers? I'm showing you logic here. Now, and this might not be anybody's short because they weren't waiting around here. Look at that. Now, let's look at the next short. So this thing, no way. What do I see? Oh my goodness. I get a sweep. Now this sweep suggests continuation. I know my sellers are there, so I know this is an outside edge in alignment with selling over here. So all this is in alignment, which I don't know till hindsight. I get VPOC migration. This is now the highest volume price. My low volume is up here, and I'm now accepting at the moment this price. 2 possibilities, as we know in TraderLab. If I break high, I can revert back and squeeze, knowing that this is where my sellers are, or I break low. If I break low, with a 90% probability to take out the first hour's low and continue to the naked VPOC below, this is a short. And I posted this in Trader Lab. I don't call trades. I'm just trying to help traders kind of see the lay of the land. And that puts this on the hit parade. Okay? Those were primary trades for me. Now, what do we do here? Let's look at this. I got my sellers here, order flow trigger. This is order flow related, but this is my target. This trade is over here for me. Let's look. So what do I know here? Resistance. Really, if I'm taking it slow and low, this is what I'm interested in. But this is done here. Now, an advanced trader could take a long here. This is a location for reversion back to reversion. This is called mean reversion. That's reversion to this mean. And let's go back to Investor RT so you see what we're trying to do here. The market is an auction. What the market tries to do is figure out what's too high. I don't know. Oh, too high? I'm out of here. The slipstream from yesterday, statistical probability, 80%, and then what was the previous day's retail price. Here, if I get here and this one is too low, I can take a long, and this is the same concept as why the longs at the overnight VPOC initially. It's the same process. If the ETH fair price is too low, I can take longs to try to go to the ETH high and this. If not, I can go the other way and come here and then take longs from here, come back to there. That's exactly what this is. Now, whether or not, I'm not saying that's what anybody ought to do, but this is what the auction is. So if I remember what the auction is, it's shopping. If this becomes too low, and I don't know where too low is, remember, clueless, but not ignorant. What do I see here? Now, let's look. Too high, break low, order flow, break low. I'm getting sweeps, which suggest counter rotations. Counter rotations. Where's too high? Right here. Sweep this side suggests counter rotation. I'm going for the naked volume point of control, NVPOC, which is here. And no clue. This is resistance. Break low, sweep, counter rotation. Where's my resistance? Here, here, break low, counter rotation. Where's my resistance? Sellers are there. Buyers are here. Rotation. Sellers are still in control. Sellers in control. Sellers in control. Sellers in control. Sellers are here. Going to zero. Already got my target. Either managing the short or out. Doesn't matter to me. It matters to you to get the high and the low. You're better at it than me because I don't trade for that. I trade to statistical and behavioral probabilities, not predictability. So I don't know. But here, as far as I know, right? Now let's look at change. I see a change in rotation. This is very important right here. What's going on, Tom? I don't know. What do I know? Let's come back to what I know. I know there's a buyer here. Only when I have this. When I'm here, what's the difference between this and this? There's no difference. Okay? That are the sellers. The buyers are here. The sellers are here. Could this have happened here? Yes. Do I know? Nope. Going lower. Watch. Change. Right here, I have change. Now, why is it important? Not because it happened there, because of this. You follow me? Now, let's come back. Change, and now it's a suspect. It's what's happening? Sellers were here. Buyers are there. liquidity is here, liquidity is here. So I'm going, and this is exactly how my brain goes. It's like, what's happening? I don't know. Change in location. So now what happens here? Where were my sellers last? They were there, you see, and under here, but these guys are now under the bus. So my buyers are above my sellers. My sellers are here at the naked volume point of control. If this is too high, we continue the Acapulco cliff dive. If it is too low, I can lean on it for a reversion long. Now, this suggests counter rotation. Sorry for the noise. This now is where my buyers are. Look, my buyers. And look where it is. Look to the right. And now I get my buyers. I can take a long down here. And this right here coming up is my objective. And there's my liquidity. So if this is counter trend, depending how you define trend. In my time frame, all I've done is come down and test the previous fair price. That's that, and the higher time frame is still up. So in spite of it all, I'm long oriented in the higher time frame, and I'm aligning in the short time frame. That's all I can tell you. This is the longs, and the idea is to come here. Actually, I below there, and then possibly here and there. Okay, that's the trade. And it's the same idea that I started the morning with, which is the longs. But if I come here, I'm back on the longs. And it doesn't mean we'll ever take this out and that we won't make new lows. That's not the business of trading. If I come, look at the structure. This was that slipstream. All I did was take longs out and early longs here. Take the stops out under these longs. Get shorts are still in here. Shorts now are in here. And that makes the longs better for me because the higher time frame is still up. So I'm trading multiple time frames, but I'm trying not to get too deep. Okay, I'm not trying to go down too short a time frame. But I also want to point something else out to you. You notice how we're trading rotations? What are these? Aren't these rotations in a short time frame? So I'm really getting down now in a short time frame. But I'm using higher time frame levels to pivot, if you will, off of. And these aren't pivots, they're just pivoting. Watch. If I get along, I have this. And if I see this front running it, I want to scale in front of it. This is my target. But when I see this, it's the same as what I showed you with the mid. I'm not interested in rigidity. I'm going to use every tool I have. By the way, look at this. See? I could be buying this. I could be buying this. But I'm not getting short. There might be one short here. Let me see. Oh. Now, this is, now there's your liquidity. There's your break. Okay. Now, in the Trader Lab, we have two trades here. One is called the IB continuation trade, which is this. Let me go back and look at something here. Actually, forgot. At 9:30 Central Time, so I have a short here, and I have over 90% probability to take the first hour's low out, which is really right here, okay? This is a short for me, and I have 98% probability in this. The break here sets up the IB continuation trade, which is this. If you didn't take this, you have this, and you're still going for that. These are structured trades in Trader Lab. Now, here's the other part. Because I got this target, I no longer have shorts for me. I'm still long oriented, and now I have more shorts. My thesis, if you will, in a higher time frame is to get more. It's like luring sellers in to squeeze them. It's no different than, remember how the market operates, it rotates on itself. Market mechanics. So if the market goes up in the morning and I'm taking longs, fine. If it falls apart, now the longs are under the bus. Okay, I can get short if I have a place. If I get short, I now know I got buyers in here. Who are the buyers? The shorts. If I get to a location that's too low, I now can squeeze the shorts. So I know I have sellers in this leg and everybody above me. If I already took the IB continuation short, which is, I think, over here, down to NVPOC, and I found too low, this is called mean reversion. This is the mean of the 2 days ago, and now this is the current mean. If I take a long here, I'm coming through the IB or scaling at the IB, and then I'm looking for this in the squeeze. Let's see what happens here. So it's a long for me. Anyway, let's see. I don't know where it is. I haven't seen this, so I'm just coming along here. Where are we? Okay, this is interesting. Where was too high? Wasn't it here? So I use these high volume areas or auction based locations. Now, I'm not saying anybody should do anything here. What happens here? This is where liquidity comes in. What was over here? This was support. If what happens to support, it becomes resistance. And I have this. I'm back to my overnight VPOC, which was support originally, and it becomes resistance. And you don't have to do anything. Okay. What you might be doing is looking at this, and if we get above it, we're reverting, and trade management. Now here's a sweep. This says counter rotation. Now what you don't know, and part of the joy is it only this, then up, or is it this, and then this? So trade management has to always be part of your plan. I don't know what it's going to do. I don't. If anybody says they know what it's going to do, they're full of baloney, or something else. I know this can give me a counter rotation. Now, if it comes down here, I know I can either come down to this or wherever. I don't have any idea. I just put trades on, manage them, and I'm as clueless as everybody else. But I'm certainly not ignorant. So what does this say? Let's look at the language. Well, the language says this is too low. So this might be too low because this is a new retail price. What do I know about this? Well, it was too low. Now it's too high. If I come back to it, I may bounce off it and come back here or fall out the bottom. I have no idea about that. Right? Let's see. Oh, there you go. My next target is, let me see, this. So I'm trading for what's called a neutral day. And so just fun facts to know and tell, and it's not a recommendation. Neutral days tend to come in bunches. I've never figured out why, but we took out the first hour's low and the market's short. If the higher time frame is up, the potential exists, not a recommendation, to take out this high. And why? There's buy stops. Why did we take out yesterday's low? There's sell stops. Why did we get to the naked volume point of control down below? Because that's the last retail price where the high volume was. If we check a price in the store and it's still too low, then we can come back and check previously what might be too high. We don't have to ever do it. That's not the thing. And that's right here. And if I come here, I can take out the stops from yesterday and continue to squeeze Ethereum. And that's not a recommendation. It's only what the market might do. So as a trader, I'm not in the business of predicting anything. I'm in the business of alignment. So my alignment, I think you can kind of get an idea of why. So the broad strokes, my friends, not the micro. This also can be a long, but it's really not structured. My outside edge is here. And why? This is too low. And in the developing time frame, this was too high. I can trade to this if I'm willing to give back my MFE. This is really not well structured, so I'm not going to say this is a structured trade because it's kind of in traffic. Here's what I know. I got more volume here than I have here. In the language of the auction, maybe, underline, it's too low. In the language of the auction, this might be too high. If I stay above here, and this here is an obstacle, okay? If I get above this, then I got that, then I got that. So I can look at this sequentially. And my thing is longs. So I'm just I trade either side, don't matter to me. But I'm always thinking about, quote, the higher time frame. So when we're trading intermediate time frame, well, I'm trading inside of this intermediate, but the higher time frame is up. This is the new all-time high. The RTH all-time, ETH all-time high is up in here, which is on the other chart. Those don't typically stay because the cash wasn't open. This keeps me taking longs as my primary trades and shorts to blow out the longs and then get realigned for continuations in the higher time frame. And it's not right wrong. Remember my objective. Slow down developing traders. Get them to become intentional. Have them build trade plans. Have them anticipate locations. And then have them vet structured trades that align with this time frame. Because that is your range. So this allows you, assuming you manage yourself and you manage your FOMO, which is also another problem, of course, to slow down your trading so you can become more intentional in anticipation. When you get down in time frame, you're going to overtrade. You're going to have more adrenaline and more cortisol, which is fight and flight and FOMO, all this stuff, and revenge trade. You lose your mind. If I can slow you down, you'll better manage yourself. You'll still take stops, but then when I slow you down, you're going to have range. That can keep you in the business because now you're trading range, which pays for your stops. Does this make sense? Can you see the logic why I do what I do for developing traders? And that's why if you're in Trader Lab, do not be distracted by what other traders do. Everybody trades their own time frame. I trade a different time frame than what you see here. But my objective is not to show off. My objective is to have you survive. So I kind of come at this from a different place, not to show you, look, I could buy this, I could, take a profit here, which I would, by the way. And this exit over here, look to put it back on, do whatever, or be a side here, I'm in balance. All of that is different. If you're a position type trader for the bigger swing, you would take some profits here. You'd be risk neutral. You could hang out with a stop under here because it's too low and sit back in your Barca lounger. More relaxed, more intentional. And yeah, you'll get taken out of your trades. Or you now develop a trade management process that you have to vet. That means what trade management process in this configuration works for you. It's not the same. So if I'm in, like yesterday, short rotations, imbalances it's called, or mean reversion trading like it was this morning, I'm not using the same process for trade management as I might be in something that's more higher time frame oriented. So you start building out different plans for different conditions. When the condition changes, it's like you're driving, think about it. If you drive a stick shift, you're on the Autobahn, you're in, fourth or fifth gear, depending what you're driving, pedal to the metal, off you go. Then you come to Lake Tahoe and you're driving up a mountain and you're going through hairpin curves. Are you driving in fourth or fifth gear? No. You're downshifting. You're in second gear. You might even get in first gear in some of those grades. And then you're in third or second. You're not in fourth because you can't. You see the difference? So when you're, and it's a poor analogy, but when you're in rotational reversion trading, you're not in the Autobahn. You're in a different condition. So just like when you drive your car, you're driving it differently. When you're taking sharp curves and there's no guardrail, and if you're in Costa Rica, by the way, they don't have shoulders. They have like a moat on each side. So if your wheel goes off the side of the road, you'll roll or go down a ravine or go off a cliff. I want you to know, you're not on the Autobahn in Costa Rica most of the time, or it's just a dirt road. How'd you like to drive there? And you drive at night, it gets a little more interesting. Think about that. Is everybody tracking? Is this making some sense? This is TraderLab. And remember the objective of TraderLab. That you stay here. That you sustain yourself. And the way you do that is overlaying time frames. But don't get too short. Just narrate it. The goal is not hitting the ball out of the park. The goal is that you stay in the business and you go through the learning curve that we've all gone through. Nobody who you see trading did this in 15 minutes, 6 months, and not even years. It takes years to develop proficiency in different time frames. So to develop proficiency in any time frame, you got to start at a slower pace in a higher time frame and start thinking about alignment. So it's not putting the lens down and dancing, between the sheets over here. It is pulling the lens out so you can be more intentional. Does that make sense? Anybody have a problem with that? I mean, if this is not, see, the thing about this issue or question is, it is specific to the individual. And if you can't trade in this time frame and you're not profitable, you're on your way out of the business. And this is where you get to make a choice. Are you going to be in the business or you're on your way out? That part's under your control. I'm not saying you can't trade the short time frames, but if you can't trade this time frame, how can you trade the short time frame? You see? Is that logical? Other than random winners. Remember, we all have random winners or losers. It's all random. So if I'm in randomness, I need to slow it down. And I need to define conditional behavior in a broad picture. And then over time, I can start compressing the time or the rotations. We are trading rotations. That's what we're doing. I know there's buy stops above these guys. I know there's shorts in this legs. Don't you? If I see a change in behavior, if I understand short time frame rotations, I can do something with this. If I don't, then I can only then start using this behavior for trade management. I don't want to reverse here. I just want to manage my short, you see, because I need to know, I need trade management before I can trade counter trend. Now, is the trend down here? Yeah, in this time frame, short. What about the high time frame? It's up. How do you resolve that? You got to start breaking it down from the highest time frame, which is up, to the intermediate time frame, down to the daily time frame, then inside of the daily time frame, you see? And try to stay outside as far as the lens go as much as possible, and then use these rotations for triggering in alignment with that higher time frame as you define it, and then use the reversals for trade management, not reversal trades. If you don't have the patience for that, I think you're doing a lot of damage to yourself because it's FOMO. And you have to recognize FOMO in yourself because it's part of us. I was talking to a trader this morning, and we were talking about Hyde. You guys know Jekyll and Hyde. Hyde's a lunatic, FOMO and revenge trading and overtrading and, all that stuff. Um, Hyde's not the enemy. Hyde is there to protect you. What Hyde doesn't understand is the difference between uncertainty and a saber-toothed tiger, which is also uncertain, what's behind the rock. So on a primal level, Hyde is here to protect you. You need to suspend your response to Hyde in an environment that Hyde did not, shall we say, grow up with. In millennia, Hyde developed for survival of the species. Hyde doesn't have a clue about this technology, which in the, let's say, in evolution, if you accept that, has been around a long time for survival of the species. This is not what Hyde knows or understands. On a more conscious level, we understand it, but Hyde supersedes our logic. It is there under the hood. So when you start out the trade, not only look at the structure of what you intend to do in your plan, recenter your thinking and anticipate Hyde, because Hyde has no clue. Hyde will never go away, and Hyde is going to protect you from what it perceives to be life or death threat. Does that make sense? So for me, that's the way I think about it. And by the way, I just saw, if I say long, short, or something, it's only long until it becomes short. So the morning for me were longs. And I'm speaking to a specific audience here. And that is using higher time frame structures or intermediate time frame structures. I'm not going to be saying get long, get short, get this or that. I am going to suggest when a structured trade shows up, what to do about it. Not to take a trade. I don't call trades. Doesn't matter. But I am going to try to draw your attention to context, because everything's built on top of that. By the way, remember, if I crash and I got about 12 minutes left, I'll try to come back in that 12 minutes. But if I crash with a couple of minutes left, basically we'll be done. Okay? If you tried to buy the previous low, you don't need to buy. You can buy the previous low on a test. It might be the low of the day if you see your buyers. When you take out the previous low, then you got the naked VPOC. It's just sequential. That's all there is to it. Where was the low? I don't remember. I don't know where it is. Yeah, I don't know what you're referring to, Tony. It doesn't matter. You just follow your plan. My plan, your plan, they're not going to be the same. When it missed the low by a tick, we saw some pretty strong short covering. That's either a reason to get out and forget it, or when we break that low, go for the next target, or take the IB trades. Any of those are all viable, doesn't matter. If you get another short, if that's your plan, you just put it back on again. It doesn't matter. If you take the long, which is, you need to know it's counter trend, you could take that long, which I would take counter trend up to that mid, which had resting liquidity. That's okay for me. If it breaks down, I have another way back in, or I don't, and it doesn't matter. This is not a business of prediction. It's a business of alignment. And as traders, our perception of alignment is an individual thing. For me, it would be okay, but I also am conscious I'm taking counter trend trade, you see. So that's how I look at it. I don't remember where yesterday's low is, guys. Where was yesterday's low? Can somebody fill me in on that? $75? Oh, really? Okay. Yeah, I'm okay with that long. For me, not for anybody else. And then putting it back out again. This is interesting here. This is a trade that I talk about, but it's an advanced process. VHVNs. This, the break. Now, here's the other part of this. If you're going to take this, your entry could be there. You see, you can wait for these retracements, or here's the or you don't have a trade. If this is too high, then you have this and this outside edge and the IB, because there'll be stops under the IB. So this is an inside type trade. This is also a reversion. These are inside. And the thing about this is, and here's the other, let's look at a couple pieces. Well, this is a big piece, okay? So we see that, okay. And we have the sweep that says that, okay. Now we have the test. What else do we know? Here, here, so that, and this, confluence. And what else? Outside edge. Now I'm still looking for this and that, which may never happen. It doesn't matter. In the meantime, if the market balances out, then I can just hang out and do this. So as it develops, I know where behavior might happen. And if I get a trigger, it's subject to my plan. Let me show you this thing. See this? Why didn't it go up? These are sellers. I have a sweep, I think, here. I don't. Sellers are here. There's the absorption. I'm sorry. Yeah, sellers are here. Buyers are here. They're absorbed. No clue. Buyers are here. Buyers are here. Sellers were there. This right here, the buyers are here. I come up here and I'm looking for continuation higher. Sellers are here. Sellers are below here. This is the last place the buyers were. Buyers are here. Sellers are here. Above the sellers, going to the moon. Here, sellers are here. Buyers are here. This break is a trigger. Now I can look. Buyers are there. Sellers take control. Resistance is here. Resistance is here. See where the buyers are? They're not. Are they going anywhere? Where'd my sellers? See them? And where would the buyers last? There, right there, and there. Okay. So when this happens, and I don't do this, so I have a sweep that fails. I have the liquidity with the sellers here. This sets my trigger. Now, this is also a suspect. When I see this, my antenna is up because I'm below these buyers right here. And I don't need to do anything. I can sit here with my jaw on the floor. So I can sell this. I can sell this. And I got this. I got to be scaling ahead of this. And if I can break down, I can come out here. That's what IB, okay? And then it's potentially rotation. The key, since I'm so close to the VPOC and my range is tight, if I can't get into this thing with enough range to get risk neutral, which I have, if I'm patient, I got to get risk neutral. And then this is really my reach to try to get here. Or I don't have a trade. I'm showing you the structure. Whether or not you can trade this is a matter of your discipline and not waiting for confirmation and selling it here, because this is the fair price. The better place to be a seller is out here. But if you don't have a way into it, minimum out here, then you wouldn't take this, okay? You just forget it. But this is the next place, and then this. And the reason for this trade is reversion. Outside in, outside in. So this is what you have. The possibilities to come back here, or what? Come out the top. That's it. It's a possibility. That's any trade is just a possibility. Does this make some sense? This is the Trader Lab, and I'm not saying this is, any good for anybody. I'm just saying this is how you learn how to trade, or a way to learn. And if you slow yourself down, you can always speed yourself up. Take position to your question, because I'm thinking, what is counter trend in this scenario? I have a question. We currently have an idea, but we were rejected again in yesterday's. How do you assess this? I continue looking for long position. It's assumption wrong because of the rejection. We're in balance, so you can choose a side. So far, we haven't gotten above this. This is your resistance, so you can pick a side. It's mean reversion. You really have to pay attention. So if you're going to trade anything in here, you're trading long or short, because now we're in balance. So right now, we're not directional, we are rotational, and this is reversion. Now, what's the primary direction? Well, because of this currently is too low, then I'm going to lean towards the long side for reversion long. If I'm trading balance, I can trade both sides, you see. It doesn't matter to me. But if you're asking me maybe a more dominant side, I think it might. See, the whole thing about this is, I don't know. I know what's happened, and I know why. What I don't know is, are we going to get below here and take these longs out? Or are we going to eventually come out the other side and get these guys out? So far, we've squeezed these shorts, but now we have the longs. So it's both sides. So I pick a side, and it doesn't matter. I could trade from either side. I'm going to lean to the longs because the higher time frame is long, and I've tested this. But it's not a recommendation, because I'll trade both sides when I'm in balance. Does that make sense? And I hope that makes sense. And there's not a right or wrong in trading. There's an alignment in a time frame that you define. My time frames are higher time frame up. Shorts are in here. They can get squeezed. I check by this level, which was a target. Who knew? But once it is, it is. If it's too low, then my last place, this is fair at the moment, and I can rotate around it. And if I can get higher, I can now squeeze the shorts out and come out today's high, wherever that went. Somewhere up in here, right? And go here. So I just trade the rotations. Balance is either side. So I don't really I have a long lean, but right here is a short, see? So it's just, follow your plan. If you don't have trades in this condition, you have nothing to do. You got to know where you're going to trade, and you got to know when you're not going to trade. If you don't have a way to define trades that are qualified, then your job is not to trade, really. Does that make sense? Anyway, guys, if you're visiting in YouTube, please give a like on the way out. Thanks for visiting Trader Lab. Thanks for your patience with the technical difficulties here from Costa Rica. Look forward to seeing you on Monday. Please review the streams. The last 3-4 days, I think, are really good in the sense of trade plans, anticipating behavior, never predicting it. Don't forget to like. Look forward to seeing you next week. Thanks, Trader Lab, so much for your support. Hope you got something from today. And remember, the job for you is to build out a trade plan that you can understand, you can align with, and to build it from the bottom up. The goal is that you create sustainability so that you can be here to further enhance and develop your trade. And I mean your trade, your business, your sustainability. Take care, everybody. Look forward to seeing you next week. And thanks again for visiting the Trader Lab. Don't forget, there's a link in the bottom of YouTube if you want to visit Trader Lab. There's no cost for Trader Lab. It's open for everybody. It's about the business of trading. Take care. Look forward to seeing you on Monday.